Welcome back to Yahoo Finance Live, where we continue to add on gains here to the rally that is underway right now. The Dow adding on nearly 1,900 points. It's now up more than 10%. Myles, I want to bring you in here. Just, we've been having some big moves lately on a percentage basis right now. Our biggest move back on the 13th, March 13th, was almost 2,000 point move, up about 9.3%. We could eclipse that, and then this would really be our biggest move since 2008 that we've seen.
Yeah, I mean, I guess I'll steal the Andy Serwer line that I'm expecting to come up in the 4 o'clock hour, which is we're back to the point where 1,800 points on the Dow actually means something, right? We've seen the Dow, kind of come from 27,000 or so. We were in the 18s yesterday. So certainly a volatile market, but I think, again, as we have said so many times, you don't ever really want to see the stock market moving this large, the moves this large on a percentage basis at any point in time, because if the stock market theoretically is discounting all future growth that U.S. companies can feasibly return back to their shareholders, well, why would that change by 8% over any one day? So certainly not a stable situation. You and I talked earlier, Jen, just about some of the names that have been doing a lot of the work. And I wanted to look at the FANGs a little bit more closely, quickly, if we could, because Netflix right now is the lone laggard or the lone stock that is lower among that group. That stock is down about 0.8%. We've seen Netflix obviously do quite well as part of the at-home trade. Amazon also lagging the market, up just 1.2% today. Facebook up about 8%, Apple up over 8%, Google up some 6%. And I think that the trend is probably, or the fact is probably going to remain true when we're through the other side of this and looking for how does the market durably bounce. I think a lot of that action is going to have to come from these names. And the character of today's rally certainly showing itself by, leaving Amazon and leaving Netflix behind. Those stocks have done quite all right amid all this volatility. But it is, I guess if I just said the rally is kind of soft, I guess it's a little bit encouraging to see Alphabet, Apple, and Facebook participating as this market goes higher. But I think anytime you see energy as the big leader here, a sector that's gotten so beaten down, a sector that's so heavily shorted, hard to be too enthusiastic about today's action.
Energy and some financial names just making gangbuster moves here. American Express is up 20%. Morgan Stanley is up nearly 18%. As Myles just said, a durable bounce. Let's bring in Jared Blickery to see if he can put any chart action on this bounce to let us know if indeed, I don't know, is this durable? What do you see here?
What's your definition of durable? I think this lasts for a few days, maybe a week or two, maybe into the end of the quarter here, and we do have some headwinds. So everybody knows about the fiscal stimulus that's supposed to come, the central bank stimulus that's underway, and the Fed is printing $625 billion per week, at least in this week right here, and that's just unprecedented. QE3 was $85 billion. But we'll take a look at the S&P 500 here, and we can see it's up 8.5%. Dow is up nearly 10%, and it is going to be a nice day. How long can this continue? Well, yesterday after the close, I said I was encouraged. I was just a tiny bit more bullish than I was Friday, and we're starting to see things fall in place now. Now, this line I'm just drawing, we're seeing the S&P 500 just break out of this really steep downtrend. This had to happen sometime. Are we going to get a 2 consecutive closes in a row, which hasn't happened since, I think, the second week of February? It's quite possible here. And as I've been mentioning, we have pension fund rebalancing, which begins to take effect tomorrow. So that would be Wednesday into the end of the month, into the end of the quarter. Pension funds have to buy equities and they have to get rid of bonds. And so that could help these movements that we're just beginning to see get underway here. We'll take a look at some other markets here. The Volatility Index, the VIX, is down. It's down about 20 points from its high, so it's not quite as elevated as it was, but still extremely elevated. 10-year T-note yield. Now, this is up today. It's up only 5 basis points, was up a little bit more. And this is kind of reminding me of March of 2009, or maybe December of 2009, because December was kind of that period where people thought, okay, we got the bottom in here, we're going to launch from here. But of course, we went down, took another leg down, and then it took the Fed launching bazooka QE in March to really get things started. So we'll have to see which one of those it might be. I think it's going to be the former, because I think we got some more pain to take. But just in line with The Fed being in the market right now. Just check out, oh, I pulled up gasoline. I was looking for gold here. Look at what gold is doing. It's having its best day since just after Lehman Brothers. And I think this is reminiscent of all the stimulus the Fed has thrown at the market here. I think gold has legs from here. And we'll just check out the action in the Dow Jones Industrial Heat Map. And we can see just a little bit of red here. Those are, and Walmart just turned green. Those are the staples and the defensive plays. You know, whenever you have a rally from these really depressed levels, you tend to get a junk off the bottom. So anything that has been depressed and really sold hard tends to lift off more. And we see that. Look at JP Morgan. It's up 12.5%. Myles was just talking about energies and financials kind of leading here. That's not the healthiest sign, but usually that is how these things get underway. So I'm a little bit encouraged. And again, I think this could have legs to last a few days, maybe into the end of the quarter. But I think we're going to revisit the current lows and maybe exceed them at some point. So here are the sectors. We see energy up 13%, financials up 12%. These are some of the best days they've had since the financial crisis. And that's not necessarily the company you want to be in. And then to the downside, in the lower right, we see staples, communication services, healthcare, real estate. Real estate has just been obliterated. Some of those funds have been, they've had to close because of so much carnage in there. But the bottom line is I'm a little bit encouraged, and I think we got some legs here, but only time is going to tell.
So a lot of green out there, Jared. Interesting to see the VIX there at 60. That's good, given, I don't know. I mean, I know it's good to be down from 80, but it just shows you how things have changed.